Are you a new real estate investor, struggling wholesaler, or cash buyer? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Whether you're starting out or seasoned, this podcast is specifically designed to give you tools that you can use right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. With this podcast, my goal is simple. It's to help beginners and struggling investors close their first deal or their next deal. Well, Chris, how are you going to do that? I use simple, low to no cost tools to show you how to analyze deals and make better offers. This is the weekly deal analysis. Let's get into the show. In today's episode, we are going just a little bit north from last week into Michigan. This is 12511 Duchess Street in Detroit, Michigan, 48224. This is a 3-bedroom, 2-bath home, 1,200 square feet, and built in 1939. Zillow is saying their list price is pretty spot on, but let's take a look at these pictures and start to analyze this thing. Brick front. I like the architecture here. Can't tell if these trees are eating the chimney on this house or it's one of the neighboring houses, but we'll get there. Pretty front walk. Decent landscaping. Decent. It looks like we got a garage in the back as well. All right, kitchen. Shaker style cabinets. Formica countertops. I think those are Formica. It might be stone, I'm not sure. Big space in there. Good amount of storage. Not sure where this room is here. Original wood floors. Could be cleaned up more. Fireplace. Walls are clean. Bathroom is really, really dated. One thing I have done myself, and I've also seen other contractors do, is paint this tile. It doesn't last forever, but it does make it look really good for about 5 years. And of course, that's going to depend on usage as well. Really no storage in there, so I would likely change this pedestal out to a cabinet, just so there's some storage in there. Nice loft space. It's hard to get a feel for the layout of this thing. We got some scuffs on the floor. But overall, this thing looks pretty clean. I'm guessing this is in the attic for storage. Good little spot. Basement. Lots of paneling. And you can kind of look right here. Looks to me like there's probably been some water damage at some point. Well, there's no heating system because here's the gas line. Here's your flue. So there's no heat system in the house or AC, and definitely some more, yeah, water damage here. They do have a bathroom down there. It looks like a half bath, I guess. Nice little fenced in yard, big. I need a favor. If you're getting value from this, would you hit that like button for me? It really helps the channel out, and I appreciate you for it. Now, back to the video. Covered patio out back, big 2-car garage. It's all brick home. Yeah, this tree would have to be cut way, way back just to get it away from the house. All right. I'm really curious to know what the heat system is in this or what they're planning to do with it. So let's check the comments. Only been on the market for 9 days. I typically like to look at stuff that's 90 days, but I look through everything available on Zillow, and the oldest thing that is available on Zillow is only 9 days in this market. No return. Main floor has 2 comfortable bedrooms. Upstairs, bedroom adds flex, guest room, additional. It's not telling us anything about the heat system. But one thing I do know from being an agent, that if there's no heat system, you can't get a loan on it. And not that it has to have heat, but there clearly was a heat system there at some point. I'm not saying anything about that. All right, so rental price wise is about 1400, pretty solid number. Whoa, look at this jump here. And this is just from, so this is saying about the Zillow estimate was saying about 86 until 2 days ago, a week ago. Hmm. Or maybe before they put it on, not telling me the day. Maybe that was the estimated, but I don't know. We'll figure it out. Listing. Holy, what? Somebody bought this thing in 2019 for $22,000. Wow. And now they're trying to offload it for 115. Wow. That's incredible. And if you were in the market or at least knew about the market back in '06, this was the previous height of the market. It's actually right around the time when I started in real estate. And then the market just went. Not telling us what the property taxes are. Must be a non-disclosure state. But um, what else can we see? What's going on in the neighborhood? There's a lot of houses on the market here. So, all right. So this one sold. When did this sell? If it was soon, then it's relevant. Or if it was recent, it was right. Yeah, no, this just closed. $26,000. What is going on here? This thing doesn't look that bad, but there's $100,000 price difference. Wow. All right, so I'm not, sorry, wrong button. Let's go neighborhood. All right, so this one was recent and sold for $26,000. This one for sale at $65,000. 100. Anything else? Similar homes for sale. 130, 115, 135, 114, 115, 110, 110, 125. These numbers are all over the place. Goodness. If you invest in Detroit and you have some, insight on why these numbers are all over the place, if you would please drop a comment. I'm genuinely interested in what the heck is going on in this market. I get deals thrown at me all the time here. I just don't know anything about it. So based off of all of these crazy numbers, I don't know, 100,000? I mean, there's no there's no heat system. So, let's go with 90. Let's say our offer price or our ARV after repair value is going to be, I think our ARV is 100. So we'll say 100,000 as our ARV or after repair value because we do need to put a heat system in this thing because there's not currently one. ARV at 100, which would make our offer price what? I know you've been watching the show. $70,000, right? Minus our repairs, which overall I think this house is pretty solid. We're not going to go on the true formula that most everybody follows on it. I think we'll just stick with that 70,000. Does that seem fair? Our offer price is going to be 70K. Now we take that information and jump over to the invest nest. I need a favor. Can you hit that like button for me? I would really appreciate it, and it helps the channel out a lot. Now, let's get back to the video. I've got it pulled up here on the Invest Nest. I love this site. It breaks everything down, gives me all the tools I need to help me analyze, and it's not nearly as expensive as the big guys. I forget what the actual monthly payment is, but if you use my link, which is down below, you get your first month for 50% off and you get 1 week for free. From last week's episode, we had one person sign up. So if that was you, drop a comment on either on this video or last week's video and let me know how you like it. So let's go through and see what we can find on here. So this is saying current market value at $89,000. So that would be our ARV. All right, so we're going to go off of this because I like that number better. So we're not going to say our ARV is 89, or excuse me, we're not going to say our ARV is 100. We're going to say our ARV or after repair value is 89. We'll kick it up to 90. I like round numbers. So 90 ARV, and I still think we're going to stick with that $70,000 offer price. One thing I really love about this is they include skip tracing. They don't charge extra for it. So if I click that button, within like 10 seconds, I'll have all of the seller's information. Phone numbers, emails. No mortgage, I would guess not, considering they paid 20 grand for this thing a handful of years ago. All right, this is going to tell me some more here. 28,000, good gosh. Location, Wayne County in Detroit. That will come into play here in a minute. Property details, nothing we didn't already know. All right, let's calculate this thing. We're going to call this 112, 511, Duchess. And we said our offer price was going to be $70,000. We are going to be paying both sides of closing. So we'll kick that up to 4. Our hard money or DSCR, debt service coverage ratio lender, is going to be charging us 2 points. And we're not going to incorporate any repairs into that loan. If I can get away with it, I only want to put down 20%. And I want a 30-year term. Investor rates, I would say we'll stick with just a solid 7. I think that's about where they are today. And our rental income, Zillow was saying we were at 1,400, but I'm gonna go check HUD to see what they say. I got it pulled up here on the HUD website. I'll drop the link for this site below as well. Super helpful, but it breaks down sometimes just by county, sometimes just by city, and sometimes even by zip code. But for an efficiency, a 1 bedroom, a 2 bedroom, a 3 bedroom, which this house is, they're saying, oh, and then 4 bedroom. So they're saying the max that HUD or Section 8 would pay is 1,570. From Zillow, they were saying it was about 1,400. So we're gonna split the middle on that and just go with 1,475. Does that seem fair? We're gonna plug in our 1,475 for rent. And this is pulling up our property taxes here. So property taxes are pretty reasonable. Not bad at all. And for insurance, I like to use $125 a month, which is $1,500 a year. Property manager is going to be 10%. Tenant's going to be taking care of all of the utilities. So we're not going to factor that in. Keeping a reserve fund or a war chest, I highly, highly recommend. You gotta plan for when things go wrong because with real estate, it's never a matter of if, it's always a matter of when. So I like to keep at least 5% for repairs and maintenance, 5% for vacancy, and 5% for capital expenditures. What is a capital expenditure? It's really kind of like the big ticket stuff. So like your roof, your HVAC, which we know this one does not have an HVAC in, so we already got to put one in. But that's what those things are for. So 15% off the top every single month, put it in a separate account for when something does happen because it's not a matter of if, it's a matter of when. Our appreciation, we'll keep it 2%. Our rent increase, per year. I keep it around a 2.5%. We plan to hold this for 5 years. And we are real estate investors, so we don't pay full commission. All right, ready to see what these numbers spit out? I need a favor. Can you hit that like button for me? I would really appreciate it, and it helps the channel out a lot. Now, let's get back to the video. Boom! Now that's a win right there. $485 a month net cash flow. I like that. So for just under $18,000, now you're going to have a little more in it because of the repairs, and we didn't roll that in here, but side topic. So overall, just say 25,000. You're still making almost $500 a month, which is great. If you follow cap rate, it's almost a 15% cap rate. Our DSCR number, or debt service coverage ratio, this is going to be for our lender. They'd like to see a minimum of a 1.2. So with this one at a 2.3, perfect. Cash on cash return. It's one of the main things that I focus on is 32.5%. And our ROI, or return on investment, is 43.5. I really like those numbers. And if you follow the 1% rule, this more than wins at 2.11. Another thing I really like about the Invest Nest is it breaks all of these things down for us. Super, super simple. So I know I'm putting 221.25 away each month in that reserve. My rent's going to be $14.75. Here's all my breakdown of fees and costs. So my total expenses, and even down here, this really makes it cool. So year one out of the gate, you're at 32.5 cash on cash return. By the time you get rid of it, you're at almost a 50 cash on cash return. That is a beautiful investment number. Now, obviously, the seller's going to have to agree to all of this, but pretty solid numbers. So if you watch the show, you know I like to get my original capital back within 2 to 3 years for if the cash flow is really good, or just if the numbers work. So with this calculation that the InvestNest does, by year 3, I'm only $1,000 short of getting it fully back. Now that we've analyzed this and realized it is a great cash deal if everything works out, now we're going to do my favorite part and analyze it for a creative deal. This is my creative calculator. You can download it off of my website, christhompsonteam.com. There will be a link below. There's a bunch of other useful stuff on there that I just kind of give away, so you can download those as well if it's something that interests you. We said our ARV, or after repair value, was going to be 90,000. Our purchase price, now we're doing creative, so we want to entice the seller to accept our creative offer over our cash offer. How do we do that? We get to sweeten the pot. We try not to negotiate their price as much as we do the terms, because that's what it gives us the ability to cash flow. So we know he doesn't have a mortgage on this. So very straight up seller finance would be the best route to try on this. Purchase price, I think we're going to try 100,000. And we're going to ask them to be our bank. But by offering 100,000, and we know it's not worth all of that, we're going to say, excuse me, we're going to say 0% interest. Now we need to figure out what our PITI is. What's PITI? Principal, interest, taxes, and insurance. For that, we're going to jump over to bank rate. Another one of my favorite tools, this one's free. I'll have the link below, but it's just bankrate.com. Helps me break down the all the numbers. And I only like to put down 5%. And that's 48,224. And our insurance is 125. Property taxes, what was the InvestNest telling us? Property tax is 125. All right, so we have our offer price of 100,000, 5% down, 30-year term. Now they'll probably want a balloon. If you're wondering how all of that works, just drop a comment and I'll either explain it to you or I'll do a new video on that. 0% interest, taxes, insurance. All right, let's see. $514,000 for our principal, interest, taxes, and insurance. And basically, half of that is taxes and insurance. Pretty solid number. So let's go plug this back in. 514, 514 for the PITI. And our potential rents we said were 1475. Yeah, baby. Almost $600 a month. And that's offering them over what it's worth. But if they're going to be our bank and hold that note, we're solid. So 221 is going into the war chest, same as the number on the invest nest. Management fee is at 10%. Our net cash flow is 592.25. Our cash to the seller is 5,000. This one is on the market. I think we'll throw them $1,000, which would be about 1%. Because if we're coming in with the solution to solve this problem, we're the ones that are going to benefit from it. There's no assignment fee because we're not dealing with a wholesaler. Closing cost is that 4%. Renos, we did not factor it in on the cash deal, so we're not going to factor it in on the creative deal as well, but plan on about $10,000, give or take. 2 months of holding, which is just 2 months of our mortgage payment, that PITI. There is no arrears, and a good TC or transaction coordinator is going to cost you about $1,500. So all of this for 12,500, you can have your return on your capital, have all your original money back in less than 2 years. This is a pretty fire deal. I think this makes a good cash deal and a good creative deal. Are you getting value out of this? If you would, hit that like button for me. Now, let's get back to the video. So these numbers might explain why investing in Detroit is a good idea. It's not a huge appreciation market, but from the numbers we just ran, it's a pretty fire cash flow market. So whether you're into cash flow or equity raise, doesn't matter. We all still need to cash flow at least a little bit to at least cover that mortgage. That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.